traders to freetradingvideos.com. You're here with Breakout Trader. Let's go through a trade here. Now, this is a trade I unfortunately missed, but it's a great example here. What we got a stock, a beautiful uptrend, beautiful uptrend. And then we get the series of lower swing highs and lower swing lows. And this develops that bull flag. This becomes our flagpole. This is your flag. What we're looking for is a break above the upper trend line. Now, a lot of traders are going to look at that trend line and say, whoa, breakout, you got that trend line below the swing highs. I'll say, absolutely. Why? We can see what I'm working from is closing prices. Okay, we can see the red candles, they gap up, trade down. Gap up, trade down. Gap up, trade down. This is price manipulation by institutions. So the actual level of resistance is coming across the closing prices of the upward candles here. And that's why my trend line is right there. So we can see yesterday we had the doji candle right here. We're looking for a break above the $69.50, $70 area based on the daily chart. So when we go into the 5-minute chart, what we had this morning was the gap up right through here. So we gapped up at the open, and we had a small consolidation, and we finally had the breakout. So what we're going to tackle today is the process of setting entry. So a couple things we could look at here. We could look at right across here, 69.49, so 69.50 area, and go just above 69.50 for the entry. Now, how far above 69.50 do we go? What I do is I use ATR. If we're going to put ATR on here real quick, okay, ATR 123. Now what we would have been looking at is right back here prior to that big move. So we got 113, which would be, I would take 10% of 113, which would be 11 cents. So we can look at 69.50, get 11 cents above 69.50, and take the entry. Or we can also see you have two candles here coming right up to that 70 price point. We may experience that again here, right? Stock breaks back up to 70, and then selling pressure comes straight back in and forces it down. So you could either take the lower priced entry and look for a lower risk with a little bit more reward, or you can take a higher probability entry. My preference is the higher probability. So what I would do is I'd take that whole number of $70, see we got the two candles come right up to that $70 price point area, and then the sell-off, and add the 11 cents, 10% of the ATR, so be it $70.11. We can then see in the next candle, huge volume. Okay, and push straight through to 72.13. Now for the stop loss, let's tackle the stop loss right now. You can look right across the bodies. You can look right underneath the two lows of those candles. Or we could go underneath the swing low here or below the opening candle. My preference right here, I'd probably take the two candles there at 68.50 area minus the 11 cents. So I'd have a stop at what, 68.39. So an entry at $70.11, stop at 68.39. Now as this moves forward, we get a swing low in. I'd move my stop underneath the swing low. Now there's two ways to approach this. You could be saying, well, hey, I want to move the stop loss under every 5-minute bar. And you'd be looking for a very short-term trade. Or you could be looking at it and say, well, hey, CLR is a oil-related company. Oil's pulled back heavily the last 2 days. Oil may rally today. Very possible. So you may want to just move your stop loss under the swing lows. My preference would be to move the stop loss under the swing lows, and that's generally what I always do. It's rare for me to come under 5-minute bars unless I'm trading futures. Pull back. Looking to break the high before I move the stop. There we break the high. Now my stop would come up underneath the low here. There we break the high. My stop would come underneath the lows through here. Okay, that's to close the day. So you could close this, so you can do a market on close order, so an MOC, market on close order, to get out of the trade, or you can simply hold this overnight. So there's a quick example there on entry using a 5-minute chart. Once again, a 30-minute gap strategy. We had the gap up, we take the high of the first 30 minutes. Okay, you had two strategies there. And then management. Just moving your stop losses underneath the swing lows once you break the swing high. This is Breakout Trader at freetradingvideos.com. Thanks for attending. See you next time. Breakout out.